Hello, everyone. This is Jim Maroos, co-publisher of the Financial Brand and host of the Bank and Transform podcast. Today, we're going to be talking about buy now, pay later solutions, a very active topic and something that almost every financial institution right now is trying to embed among their overall customer experiences. Buy now, pay later solutions presents an enormous opportunity for banks to meet rapidly evolving consumer payment preferences. By embracing embedded payments and fintech partnerships, traditional institutions can democratize access to flexible financing options in a user-friendly way. However, managing risks and creating positive consumer experiences remain essential. Financial institutions that take an innovative approach will be best positioned to capture the buy now, pay later opportunity while promoting financial inclusion. I am thrilled to have Mike Haney from Galileo and Akshay Almakar from SoFi joining me today to explore the world of buy now, pay later solutions and its implications for the future of banking. As buy now, pay later solutions gain popularity with consumers and merchants, my guests will share insights into the opportunities that this presents for financial institutions of all sizes, as well as the risks that need to be navigated. We'll hear perspectives on how buy now, pay later solutions can expand access to financing, the importance of embedded payments, and real lifetime case studies of how banks are capturing this opportunity through partnerships and innovation. So welcome, Mike and Akshay. Before we start, can you take a little time to introduce yourselves?
Yeah, absolutely, Jim, and thank you. Great to be with you and Akshay today. For the audience, my name again is Mike Haney, and I'm currently the head of product strategy here at Galileo Financial Technologies. I've spent over 30 years in the banking and fintech industries, primarily focused on retail and SMB banking, lending, payments, and wealth management. Spent a chunk of my career at multinationals like Citi, Barclays, and UBS around the globe. And for the remainder of my career in software and services industries, such as FIS and Pega, but always focused on the financial industry. Akshay, over to you.
Thanks, Mike. And Jim, it's great to be here today. So my name is Akshay Almakar, and I lead the checking and savings business here at SoFi. For those who may not be familiar with us, we are a member-centric one-stop shop that provides digital financial services. And our goal is to really help our members achieve their financial independence and get their money right. We do that by offering a broad variety of products and services that help our members save better, spend better, invest better, borrow better, and protect their hard-earned financial assets. On the checking and savings side in particular, we offer a market-leading value prop in the form of no fees, a high yield on both checking and savings, and innovative features like up to $2 million in FDIC insurance. We actually partnered with Galileo last year to develop our own Pay in 4 offering, and I'm really excited to be here today to share some of the insights and learnings we've learned along that process.
So what's really interesting about this webinar today is that Mike comes from an organization that actually deploys with two other financial institutions their solution, as they've done to SoFi, where Akshay is employed. So while it's part of the same organization, what's interesting is we're going to be getting the insights as to how it's working in the marketplace, as well as how financial institutions can engage with Galileo to deliver these same type of experiences to their customers. So, Mike, buy now, pay later has seen explosive growth recently. What's driving such intense consumer and merchant interest in these solutions?
Well, I thought we would start by looking at some of the key statistics. So over the next couple of slides, we're going to show you that this is no longer just a niche solution, but has actually become quite mainstream. And one of the interesting stats I actually saw today in the financial brand was that it has now reached the number 6 spot in terms of consumer preferences and how they pay at point of service, compared to things like credit and debit cards and digital wallets and the like. So it really has taken hold. So let's look at some of the other stats that we're seeing. Starting with this first one, that 78% of consumers are now open to using this type of solution to finance their everyday purchases, which is quite extraordinary to know that over 3/4 of Americans are open to it. And we're also seeing in some reports that about 50% of Americans have used buy now, pay later at least once. If we look at some the other statistics, we're also seeing that businesses are getting into the game, not just merchants providing buy now, pay later as an option for their consumers to purchase their goods and services, but they themselves would be quite interested in leveraging these types of installment payments to run their own businesses and purchase the goods and services they need to operate their companies. Next, we'll look at some of the numbers in terms of the U.S. market. In terms of the millions of people that have used buy now, pay later, and it's grown to about 50 million adult Americans have used this service. And globally, we're seeing the same types of trends. 900 million, almost 1 billion people worldwide are projected to have used buy now, pay later to finance their purchases by 2027. So, we're going to be walking through some of the reasons about why this is growing as we walk through the presentation today. It's seeing, more than double-digit growth, triple-digit growth. One report I saw even had it marked as 1,000% growth since buy now, pay later first came onto the scene. But regardless, we do know that this is rapidly becoming a preferred way to finance purchases by consumers and businesses of all types.
When we look at this, Mike, it's interesting, as you said, the growth has been enormous. And the key more than ever is for traditional financial institutions to actually get a share of this extraordinarily expanding pie, as opposed to being left behind. I mean, consumers sometimes right now, more than ever, are considering their primary financial institution being that organization that provides credit opportunities as opposed to a checking account. We don't say checking accounts for granted because they're all embedded in our phones. So it's not really anything new. We're not writing checks as part of an engagement. And buy now, pay later really provides the opportunity to have ongoing engagement and the opportunities for growth with beyond just the first interaction. So, Mike, what role does buy now, pay later play in the transformation of the financial services landscape? How are traditional firms responding to this trend?
We're going to get into a little bit later about why traditional financial institutions, such as banks and credit unions, are extremely well positioned to do well in this space, even though they are primarily second movers into this world. But I thought we'd actually start by looking at some real world examples by top financial institutions in the US. This isn't just limited to neobanks or smaller banks. These are major banks who have gotten into this purchase installment game quite heavily. A top 15 bank has actually been in has purchase finance partnerships with the leading electronics company since about 2015, before buy now, pay later was sort of a household word. They have expanded with major electronics and appliance partnerships since that time, and gained a lot of valuable insights and experience about how to get into the purchase finance game through these partners that are actually non-financial brands. And they've tapped into something which is something we call the electronic or appliance refresh cycle. Unlike in my parents' or grandparents' generation, things aren't really meant to last a lifetime anymore. And also these types of categories like electronics are continuing to advance at such a rapid pace that people want to replace them quite frequently. So we're seeing a sort of tie-in between buy now, pay later and other types of purchase installment loans and this electronic and appliance refresh cycle. This same bank has since partnered with one buy now, pay later player that is getting into other industries such as home improvement projects, and a second buy now, pay later player who's come up with a mechanism similar to ours around using a virtual card for one or multiple purchases. The second bank, which is a top 50 bank again in the US, has partnered with a major buy now, pay later player to work with merchants at the point of sale. And we're going to talk a little bit later about the different flavors of buy now, pay later, and they're not all at the point of sale. Some are pre-point of sale, some are post-point of sale, and we'll talk about the differences. But this bank is working with their existing merchant partners to provide this service together with a key vendor that takes some of the burden off of the bank for providing some of the services. And lastly, I'll point to a top 60 bank, which has two partners. One is a technology partner, and the other is an operations partner. So the actual loan servicing and related loan operations are also outsourced in this particular example. Again, working with existing merchant services that this bank already has, but working with providers that can do everything for the full life cycle of the loan, from KYC, pre-approval, credit strategy execution, and they even have come up with a brick and mortar solution using various QR codes and text messaging, so that you're not just limited to shopping online. You can actually also shop in store with these solutions. Of course, I also want to use this opportunity to let Akshay talk about what SoFi is doing in this space as a fourth example of a financial institution getting into the pay in four world.
Yes, definitely. We definitely saw the trends heading in the direction of pay in four. And so we actually worked with Galileo to launch our own pay in four product. And the way it works is it gives members the ability to split a purchase of up to $500 into 4 equal installments with no fees and no interest. So a really great consumer value prop. Of course, we are a digitally native company. And so naturally, this is a digital first product. We pre-approve our members for a particular offer. And once members accept that offer, we instantly provision a virtual debit card right within the SoFi app that they can then use at thousands of merchants nationwide. We've seen really good traction with it thus far in terms of take rates, and our members really love the product. I think 80%, we did some consumer surveys, and 80% said that the process was really easy to understand. 75% were really satisfied with the service. And generally, we're seeing the product engender a lot of trust. I think members really feel like we have their back. One of the great quotes that we got from the survey was, "Look, it's a great program. I feel more secure using SoFi's Pay in 4 product than other buy now, pay later programs." And so we're seeing a lot of ancillary benefits in terms of engagement and trust. And so it's definitely a product that we want to continue investing in.
So Akshay, in the implementation that you've done with SoFi, a couple of things are very clear, because I've gotten into the product. Number one, the customer effort required to implement this product is very, very minimal. In other words, because you're a digital first organization, you're doing things that many financial institutions don't always do very well, which is taking a great platform and making it very difficult to actually leverage it. You've not only made it easy to leverage, you've made it very understandable, as opposed to making it kind of like open-ended. The Pay in 4 is a very simple, very coordinated product that people understand from beginning to end. More importantly, the way you've integrated with other products makes it so that the use of this is very simple. So even if a person says they want it but don't know how they're going to use it yet, you make it really seamless. Thirdly, and I want you to speak on this a little bit, is that because of these relationships, because you allow them, the customer, flexibility as to how they use it, you're collecting data that you didn't have before. I mean, SoFi, yes, while a lending platform, it was very specific, but in getting these additional transactions, you're building your insight base and your customer understanding base to a point where further interactions, further engagement is pretty easy, isn't it? Can you explain a little bit about that?
Yeah, that's definitely right. I think one of the advantages of being a bank is that you do have a lot of information about your consumers already, right? You have a little bit of information into their spending patterns, into their saving patterns, as well as what they're investing in. And so we're really able to take all of that information and make sure, first of all, that this product is right for you, right? Like I said, for us, it's a pre-approved offer. And so it's not necessarily available to everyone. As a financial institution, it's really important that we're providing access to credit in a fair and responsible manner. And so that's one thing that we look at from the very beginning, just to understand whether this product is right for you. And then once you actually do use the product, this is all about building great consumer experiences, right? So we want to make sure it's super easy to use. That's why we have that debit card provision right within the app, and you can use it at right. Sort of thousands of merchants. And you're right, Jim, in that post that transaction phase, right? The journey sort of continues with the member at that point. And so we're able to understand sort of where they're actually using Pay in 4. and able to sort of build a better offering for them. Whether some of the things we're considering for right now, for example, is that members really want to use this product not just for $500, but for larger ticket sizes. And so by getting some of that feedback, we're able to take those insights and invest it back in the product and understand how we can sort of make it even better for our members.
Now, what's interesting, Mike, is that your offering, which is a platform that any financial institution, fintech, or business can use, is really customizable. And really the innovation, the differentiation between one organization and another is how you leverage your cutting edge platform to deliver a better experience. Now, as I understand it, you not only work with banks and credit unions, but you work with fintechs and businesses as well around buy now, pay later, which again expands your ability to work with all types of organizations to implement the best possible product, correct?
Yes, absolutely. And that flexibility in terms of configuring it to the way that our direct clients want for the benefit of their end consumers is key to the Galileo strategy. That we have a solution that can rapidly adjust, not only as the industry adjusts, but also the needs of our clients adjust over time. And we had an entry point into the industry, but we're not stopping there. As I mentioned previously, there's all kinds of different flavors of this sort of category that we now call buy now, pay later, more generally called purchase installment lending. And we're going to be tackling more and more of those different variations as time goes on. And it's interesting, the first movers into this space, which have now become household names, are, really when you look at fintechs and digital challenger banks and neobanks and the like, one of the first things they focused on was that user or customer experience, and how do I make the experience better than what I'm getting from traditional payment mechanisms or traditional banks. And so that's really, for the last decade, as we saw these digital only entities come on, was to focus on that experience. So the early movers into buy now, pay later really spent a lot of effort getting the checkout buttons at point of sale on merchant websites, and being right next to checkout buttons from Visa and MasterCard and American Express, along with other players like PayPal and so on. And so they've now reaping the rewards, but even they aren't standing still, right? They have also diversified the different types of payment and installment lending related solutions. They've all now gotten their own consumer finance and money transmitter licenses so that they're legally able to do that. And they're partnering with sponsor and partner banks as well. So again, they can get those wholesale lines of credit, or they can issue cards, or they can provide more of a traditional monthly installment, which might have an interest rate to it. But it all started with that focus on the customer experience, and that's what propelled them initially into the leadership category. And they've also done other really interesting things, such as creating a marketplace. So you can actually now go to these vendors. They have their own mobile app, and they can help you look for the product that you're looking for. And then, of course, once you find it, help you pay for it in various different ways. So it's a rapidly evolving industry. The fintechs have taken the lead, but as we just discussed, the banks are maybe second movers, but are innovating at a same and similar pace.
What's interesting here, and I want to keep on emphasizing it to our audience today, is that the different ways you can go, the integration, the innovation, the deployment, all can be customized to such a degree that no two organizations have to take a plain vanilla approach to this. And as Akshay had mentioned, the embedding it within a debit card, the ability to embed it within a mobile app to make it so that credit's always available and within the platform is really a tremendous benefit. But it also makes, as Akshay mentioned, a situation where you can set different credit limits. You can go down to a very low amount, but you can also make it so if somebody wants to, they can say, hey, I'd like to have a higher credit availability, and that goes into the platform. What's nice then, it really works well with financial institutions' ability to look at alternative credit mechanisms for scoring and for deploying the service. Biggest part of this also is Mike and Galileo can work with financial institutions to tell you what has worked elsewhere. They won't get specific as to, oh, this is financial institution ABC, but they will say, here's things we've seen work very well. And more than ever right now, financial institutions are looking for that low-hanging fruit that allows them to deploy solutions in a very fast and scalable way. And even to the degree where you can even alter it over time. And I think, Mike, you can elaborate a little bit about Galileo's leading buy now, pay later platform and how you're really helping with both innovation and deployment in a way that really is unlike any other provider out there.
Yeah, absolutely. So, a couple of things about Galileo innovation, right? So our first foray into this space didn't require us to set up a massive merchant network. We decided to use our card network partners to basically create that virtual card that customers can then go shopping with, as Akshay described in the case of SoFi. That flexibility, of course, we do allow for flexibility of pricing, of payment frequency, of duration of the loan, et cetera, for the clients. So different types of institutions that work with us can take advantage of the fact that it is a fully flexible solution. We do surround it with our risk and fraud detection platform. So we definitely help to mitigate financial crime while providing all kinds of data. As you mentioned, Jim, we provide all kinds of raw data and data analytics to help our clients understand the trends that they're seeing and how they can get ahead of those trends. And of course, we have a payments hub for loan repayment that institutions can work with us as well. So it's not just originating or servicing the loan; it's also making sure that those repayments happen. And we're going to be continuing to leverage our historical history of being in that payment processing space. To your point, this is essentially an outsourcing solution, both ITO and BPO. So you get that embedded scale, you reduce the burden on yourself as an institution for having to do everything, and you can rely upon us and put pressure on us to take care of some of that thing, including scaling as you grow as well. And we have that history of being partners between the sort of digital challengers as well as the sponsor bank. So embedded finance has been with us since day one when we first got started. And we have that full legal and compliance team that's helping our constituents remain regulatory compliant no matter how the laws and regulations are changing. And as you know, buy now, pay later is being heavily scrutinized by the industry. And we are following those regulatory trends as needed. So dedicated customer support, scalable solution, that's really sort of the mantra that we have at Galileo.
It's interesting. I speak with financial institutions all the time, and the ability to use composable solutions that are developed by specialists that really have a lot more skin in the game than any financial institution has the ability to do is a big deal. In addition, Akshay, I would imagine since you've implemented this solution for a while, you've seen some challenges that you faced and also some opportunities that maybe you didn't see initially. What are some of the challenges and opportunities that you've seen?
Yeah, so I think in terms of challenges, it goes back to the point that I was mentioning. As a financial institution, we want to make sure we're taking an appropriate amount of risk. And so we initially started off fairly small in terms of who we'd make this available to, in terms of the limits that we'd offered them, and in terms of sort of where they could use this product, right? And over time, as we've learned more about our customers, we've been able to expand along a variety of those dimensions. And so we're starting to test now higher limits with our consumers where we've expanded sort of the set of merchants that this product is available at. And we're also sort of iterating on the product construct itself with our partners at Galileo. And so I think sort of to take a step back though and think about the more macro level, I think the challenge here is to really make sure we can do this in sort of a responsible manner for our clients, right, for our members. There's some reports that have come out from the Consumer Financial Protection Bureau around making sure that this is a responsibly used product and helping our customers avoid the pitfalls of sort of debt stacking and making sure that they're actually able to repay. And so a lot of our focus has been on thinking about this product from that lens and really making it the best tool possible for the members to spend responsibly and spread out some of their purchases.
So, Mike, when we look at the consumer, the actual final user of this product, how are the consumer preferences changing in alignment with their shopping behaviors? And even more importantly, how much personalization are the consumers looking for with regard to the buy now, pay later solution? Because we talked a little bit about the broader perspective of build a specific solution for your institution, but the ultimate goal is actually to make these personalized solutions for each individual consumer. Can you talk a little bit about the consumers' behaviors that have changed, but also the payment options and tech advancements that you've seen at Galileo?
Yeah, absolutely. So, purchase finance has a long history, right? It's not exactly a new concept. If you go far enough back in time, having credit at your local general store, grocery store, variety store, whatever has been there. The layaway model, for those of you like myself who grew up in the 70s and 80s, was very common. Rent-to-own models still exist. Even in the small business world, the concept of trade credit has always been there. But buy now, pay later has shifted some of these dimensions in very key ways. Firstly, merchants are happy because they're paid upfront. They don't have to get into the game of being a lender and understanding concepts like credit risk and default and delinquency and so on. So they're very happy because they get the full amount of the thing at once. The loan repayment, of course, would be then handled by a third party. Customers also, unlike, let's say, a layaway program, customers are also getting their item immediately. And then in general, the initial flavors of buy now, pay later had much lower rates or fees than we would see with traditional credit products that you might get from a traditional financial institution. So when the buy now, pay later vendors first came into this space, right, they focused in a simple area, right? Partly to get below things like the Truth in Lending Act and other consumer loan-related regulations, but also because these are small dollar, typically small dollar loans, and a lot of banks weren't in the business of small dollar things. So these were the traditional pay in 3, pay in 4, typically over a matter of weeks, and a small dollar amount, which was considered low risk. Consumers also like the fact that if credit checks were performed, they tended to be soft credit checks rather than hard ones, so your credit score wasn't impacted. And that just exploded as awareness of these solutions took hold. And as I mentioned earlier, as we saw more and more BNPL checkout buttons at checkout. So, massive, we saw triple digits, as we discussed, in CAGR growth. Millions of Americans have used it at least once, many of which are using it regularly, and literally in the billions of dollars of spend it has reached. And as I mentioned before, has now reached the top 5, top 6 in terms of payment preferences after cards and gift cards and wallets and so on. So we even have seen that over a quarter of Americans have used it just within the last 90 days. One of the things we wanted to talk about, which is on the next slide, is how this is advancing credit, right? Fundamentally, people need credit, but there's some scary stats out there. Like the Fed came out recently and said that 39% of Americans, if they face an unexpected expense of only $100, that they would not be able to cover that using their existing funds. And but also 1 in 10 adults, or 26 million Americans, are what we call credit invisible or unscorable, which is like a thin file in the credit bureau. So we'd noticed that buy now, pay later cohorts initially started, fitting into this category of not being able to be scored, or they have a thin file. An even larger percentage were considered what we call subprime, right? So they had some issues with their credit history in the past. But we have seen that it hasn't stayed there, right? Now, faster growing segments tend to be across the credit score spectrum, even though one of the things that has continued to stick is that younger consumers tend to be using it the most. Now, how has it impacted their credit? Actually, in a positive way, right? So people who become regular users of buy now, pay later tend to be using it as if other people use a credit card for their daily needs, right? For their lifestyle sustainability. And they tend to be able to lower their other types of debt, whether it's auto or home or other types of loans that they have. And so they're kind of treating buy now, pay later as sort of an all-purpose credit card like other credit card holders would do, even though they don't have access to that type of traditional credit. So that's actually good. We're seeing derogatory comments lower. But one of the things that we're realizing, of course, is this could be due to the fact that we're now shifting credit usage outside of the visibility of the traditional banks and credit unions. And that's one of the reasons why we're starting to see that data be captured by more traditional players like banks, credit unions, and even the regulators, so that we can really start to understand, is the positive trend we're seeing in terms of credit access actually a good thing or a bad thing? So there's still a lot to learn in that area.
When we look at the overall marketplace right now, as I mentioned earlier, financial institutions are really looking to see how can they take their data, AI, and technology to innovate at speed and scale using partnerships such as with Galileo. From the standpoint of leveraging these types of partnerships with third-party organizations, how does the offering of buy now, pay later solutions, how can it be done quickly and without a whole lot of upfront investment?
Yes, a number of the examples I gave earlier in the traditional banking space for the banks who've gotten into this, you may have noticed my comments that they are working very closely with partners that can reduce the burden on the bank for having to build the tech stack, have the operations team to run it and support the end customers. So it's almost becoming like an outsourcing arrangement where it's easily and seamlessly integratable using modern APIs. Technology is running on the cloud, so it's infinitely scalable as the business grows. And the day-to-day operating and monitoring of these solutions and dealing with some of the operational processes that you would typically see, these partners like Galileo can do a lot of that for you, which gets you to market much more quickly than you would traditionally in an older model where you might build everything yourself. It's in-house in your own operation center, your own data center. We want to, massively reduce the burden on these financial institutions to get into this game. So that modern tech stack and that modern managed services offering is really the name of the game these days.
It's interesting, Akshay. Now, mind you, Galileo is part of your organization, but you have choices out there, and you've used them in the past. What benefits does the integration with Galileo, the integration having a third-party provider, provide SoFi in the development and deployment of a buy now, pay later solution?
Yeah, I think Mike mentioned it, but speed was definitely of the essence here. And so in terms of our execution, we actually went from conception to having the product live in consumers' hands in just a matter of months with just one team on the SoFi side. And so it speaks to the power of the partnership with Galileo and all the capabilities that they brought to the forefront to actually bring this product to market. Beyond that, we actually rely on Galileo to do a lot of the heavy lifting behind the scenes here. We effectively own the consumer UX, but Galileo's doing most of the heavy lifting behind the scenes, whether it's actually creating the virtual card, managing authorization with the card networks and with the merchants, thinking about the settlements and refunds and credits, and all of that heavy lifting is sort of done with our partners. And so it's been a really great partnership for us to be able to leverage the tech stack that Galileo brings. And like I said, speed was one key part of it, but the other part is just the robust platform that underlies the whole product as well.
And you know what, Mike mentioned it earlier, and we sometimes take it for granted, but it's Galileo's job to keep on top of what's going on with compliance and regulatory constraints. And there's very few financial institutions out there that can look at all the moving parts with different solutions and also find ways to deliver it so that regulatory constraints don't make it so there's friction in the consumer experience. And we can't take that for granted because, and the reality is not only is it speed, but we need to deploy at scale to make these things happen and also use the insights we generate to deploy other solutions outside of buy now, pay later. So, Mike, why are embedded payments and APIs so critical for delivering buy now, pay later solutions?
Right. Well, we're definitely moving into a world where consumers expect their journeys to be seamless, right? And so financial services is a part of almost every journey out there, particularly purchase journeys like we're talking about now. They don't want to go offline to a bank branch or some other mechanism, even any kind of bank branded channel, whether that's a mobile app or a web banking solution, to complete their journeys and then come back, right? So imagine Jim, you and I are old enough to remember the days where I might do my research online to purchase a product, but then I had to go to the shop and actually buy the product there, or go use a catalog or contact center to do it, and everything was sort of offline. Now imagine a world where you couldn't just have an API centric world where you embed purchase mechanisms, insurance mechanisms, lending mechanisms directly in the non-financial brands' websites and mobile apps, or even in a physical store. So we don't want to go back to a world where these experiences and these journeys are disjointed, even though in reality you're getting a number of these services from third parties like the banks or the credit card companies or what have you. So these APIs, this whole journey of embedded finance is making our lives easier and seamless, to the point where younger generations don't even know that there were other ways of doing things in the past, right? So it's all about the customer experience at the end of the day, and making those journeys as smooth and seamless as possible.
I'm smiling a little bit here, Mike, because while you provide this capability, I use the saying, bankers tend to get in their own way. And you mentioned about being able to do it all on a mobile device as opposed to going and doing it someplace else, or opening at a branch or something like this. This is so important, just like it is for digital account opening and everything else, for bankers not to take advantage of the capabilities of digital interactions for many reasons. Number one, friction. Consumers don't want to have to go to another place to get their solutions. Number two, they want it seamless and minimal effort score. So what that means is they don't want to, as they try to use it, to have to keep on asking for it, or have to go elsewhere to get what they want to be done. And probably just as importantly, when it's all done digitally, this consumer path towards buying, the consumer interactions can all be captured digitally, so you can measure the results. If you break it apart, you're losing a lot of customers in the process. Mike, what are some ways that some of the banks and fintechs have really brought novel solutions to the marketplace?
Yeah, I think where the innovation is happening now is, variety of segments. Younger people are still the dominant users of these purchase installment loans like buy now, pay later. But the fastest growing segments are actually older segments like Gen X and Boomers. So that's what's also pulling some of the buy now, pay later solutions from the virtual world and into the store itself, whether that's using a virtual card in your digital wallet, or even a physical card that it's being issued, so that you can take some of these same concepts back into in-store shopping. We're going to start seeing, with all the analysis being done by credit bureaus and regulators and the banks themselves, we're going to start seeing improvements in managing delinquency and default, right? So better collections and recovery types of solutions for buy now, pay later. We're going to start to see, now that the credit bureaus have some of the data, how it's going to they've been keeping it separate up to now, but how is that going to influence your credit score? We're also seeing a lot of industry-specific solutions. We talked about home improvement before, but travel and hospitality, paying for your expensive cruise ships, telecom, right, paying for your expensive smartphones. Healthcare is a really big one. Medical bills tend to be high, and how can I pay for them more over time? So we're seeing a lot of industry-specific solutions. Again, how can we leverage newer technologies like AI for combating fraud, doing credit decisioning, personalizing offers? We know for a fact, right, that if a promotional message accompanies the buy now, pay later option, that 74% of consumers are going to choose it, right? It really helps. And a lot of those promotional offers are driven by AI. And also automating the whole client servicing that sits around this, using intelligent virtual assistants and chatbots and the like. So we're seeing a lot of innovation in this space, and it's only going to mature and get far more interesting and really become that alternative to credit cards and other mechanisms, which have kind of lost favor, particularly amongst the younger generation.
So this final question is going to go to both of you, Mike and Akshay. What lessons have you learned in the process? And just as importantly, what advice would you give to financial institutions that will help them get started without stumbling? Akshay, I'm going to start with you, actually.
Yeah, for me, look, this is a rare product that's a win-win-win, right? It's a win for consumers because of the convenience it offers and the access that it offers. It's a win for merchants because they see greater pull-through in their funnels and higher order values. And it's a win for financial institutions because there is higher value in the ecosystem relative to other payment methods like debit, for example. I think when you think about building this, the key is, again, building in the right way with the right consumer safeguards in place, and with the right legal and regulatory compliance framework. It goes back to the basics, but companies need to make sure that they're extending credit to those that have the ability to repay and help consumers avoid issues. If companies can do that, I think they'll be rewarded in the form of higher NPS scores, deeper engagement, and ultimately longer lasting consumer relationships.
Mike, from your perspective, what observations have you seen in implementation? And just as importantly, what advice do you give financial institutions if they want to get started?
Yeah, I think the traditional banks are extremely interested in this, and they do need help getting started, as you say. We have received regulatory guidance a few years ago that banks can get into this small personal loan and installment loan space for purchases. And banks of all types, from Bank of America to Truist, et cetera, have really accelerated their offerings in this space. But not all banks are willing to sort of rebuild their merchant acquiring business. We have seen some like Citi and Chase and Citizens, but not everyone's going to be able to, put that buy button on the merchant space. So they need those innovative ways, like what we've created for SoFi, which is a card-centric first way. But we do know from a consumer perspective, brand and trust matter. And they trust their banks and the traditional financial institutions higher than some of the fintech players. So if the banks can figure this out, they have a great chance of winning. And we're going to see some of the digital challengers actually turn into banks and consumer finance companies if they already haven't done that. So it's not going to be just about the technology. Technology is an enabler, but banks are well positioned, right? Their cost of funds for these loans is lower than any other player. They already have strong credit decisioning and origination solutions, and they have the full ops and tech infrastructure that they need to manage these loans. One of the other things we're really watching closely, you may be familiar with Pays from Early Warning. That's the bank's answer to digital wallets. If this succeeds, right, it provides the banks, because Pays, of course, and Early Warning are owned by a consortium of banks, to do that instant issuing into the digital wallet for purchase installment loans. So this is going to be a really exciting thing to watch if we see things like Pays take off. So exciting space to come and lots of lessons learned. And we feel we're well positioned with our partners like SoFi to understand these trends and take these lessons learned to our other clients as well.
Thank you so much. We have time for one question from our audience today, and it came in from, I think it looks like the West Coast. I'm wondering, how does buy now, pay later contribute to advancing credit assets, especially for underserved? Because every financial institution talks about it, but it's really hard for financial institutions to really rethink and reset what they've known in the past, what they've tried to avoid. We've got to move more and more from a risk avoidance to a risk management process for financial institutions. Mike, how does buy now, pay later actually contribute to expanding the access to financial services by underserved populations?
Yeah, as you know, regulated financial institutions, from a fairness perspective, can't walk away from certain cohorts, whether they're subprime or lower income or other types of underserved niches. So they have to come up with offerings for that community and for those types of consumers. And we know that these types of BNPL loans have been extremely popular because, at least in the beginning, they sat outside of the normal sort of credit scoring process. So they became wildly popular. And as I mentioned earlier, it has had a positive impact on their ability to reduce debt in other areas. It has had a positive ability to reduce some of the derogatory events in their life, like bankruptcies, for example, or defaulting on loans. But we still are trying to understand that, because data is going to be what provides us the real answers here. And luckily, as I mentioned, the regulators are collecting that data, the credit bureaus are collecting that data, So as we, as an industry as a whole, learn what these types of solutions are doing to us as a society, we're really hopeful that we're just going to mature these things, but not to the point where we will go back to excluding certain underserved segments of society.
Gentlemen, I can't thank you enough for your time today. You know, it's very interesting as we look at deploying new services. And in a way, this is an old service repackaged. But either way, I think it's important for any financial institution, if you're thinking about looking at this type of solution, that you reach out to either one of these gentlemen to find out about their experiences. The call is cheap, the email is cheap, and the reality is the solutions, the insights are invaluable. There's an opportunity here to learn what works and how it can fit within your strategy. I think what's really unique about Galileo and the way SoFi is implemented buy now, pay later solutions is we need to move toward a personalized engagement strategy. This is a great way to do it, a great way to collect insights, a great way to then cross-sell, and most importantly, build engagement beyond the transaction. You know, we have so many things that we do daily that's transactional, and therefore organizations, or I should say consumers, are going elsewhere to expand their knowledge. Stop them from going elsewhere to use other financial institutions. Implement this type of solution on your own. Gentlemen, Akshay, Mike, thank you so much again for being on the show.
Thanks for having us, Jim.